This is the beauty of the live every single time.
Ah, you're
With
waiting for people to connect. Wow, I love that. You're right. Well,
we're yeah, because every time it's always like a question mark if we're live or not. And I'm
uh,
still trying to get my gist into this LinkedIn Live thingy. And it's not the fastest service, if that makes sense. I
are
need
we live
to
or not? How does it work?
I am
Are we
trying
live?
to figure
Ah, do you want me to try to connect? I'm going to try to connect with a different device.
it. Okay, seems like we are live. Okay, that's great. All right. Let me no, they say it's not live. Okay, bear with me. Yeah,
We are live.
can they see us? Anyone?
They see you, man.
Okay, wait.
Just wait.
Okay. So they can see you are receiving the feedback that we are seeing live.
Yeah,
Okay, that's amazing. And let's then start from here. Okay, amazing. Seems like we're on. It's not, unfortunately, it's not the first time. We're still trying to get the gist around this whole LinkedIn Live setup. But hey, eventually we will get there. So again, happy Friday, everyone, and welcome back to the Coding Capital, our weekly LinkedIn Live series where we break down what's happening right now in the private equity world and of course trying to make sense of the mechanics behind the headlines. I am Andrea Cosentino, and just in 30 minutes, we're going to walk through the biggest news stories of the week. Not just what happened, of course, but why does it matter to you? Of course, we try and connect the dots between market trends, advice for GPs, LPs, regulatory changes, and how all of this is going to impact you and your business. Each week, we will also generate unique visual frameworks that are going to help make sense of complex trends. Of course, if you're joining us live, you can see a chat on the side or below. Feel free to drop your questions, and us and our team will try and gather your questions and then drop them during our conversation if we have, of course, enough time to cover everything. But now, jumping in, for those who follow our Medium blog and those who follow us on LinkedIn and follow me on LinkedIn, you must have seen that this week my weekly LPGP partnership post was about artificial intelligence and how he's rewriting the private equity markets and the deal adoption, the deal structuring, and all the adoption services that there might be in the industry. Of course, if you missed that, make sure you subscribe to our Medium channel or our LinkedIn channel so you can keep up to date. Now, as you know, every week, other than discussing the latest trends, I also want to invite very, very known thought leaders in the industry. And this week, I decided to invite here a good friend and also an SAP alumni fellow, Jean-Paul Sassi, head of EMEA at Wand AI. Jean-Paul has a definitely outstanding experience in the AI space and technology applied to financial industry, private market, but not only, of course. But with that said, Jean-Paul, would you like to introduce yourself?
Oh, Andrea, thanks a lot for having me. It's a pleasure to spend my Friday afternoon with you talking about some very serious stuff before a nice weekend. I've just probably 20 seconds. As you've mentioned, I'm an OSCP alumni. You and I have met over there. I've spent the first 20 years of my career in advisory, operational advisory, doing operational transformation in asset intensive industries, essentially energy. And then 5 to 10 years ago, I've moved progressively into technology, initially into machine learning focused software, and then recently agentic solutions the last year and a half with a company called One AI. I'm based in Abu Dhabi, and as you've mentioned, I cover Europe, the Middle East, and Africa in terms of markets. And I'm really happy to be with you guys today and talk about first of all the technology and more specific agentic AI and how it's disrupting private markets. Back to you.
Absolutely. Thank you. And this is the point, right? Is to bring expertise. We just don't talk deals, but we talk everything that affects the industry. And I think, we started, as I was explaining to you, from more global macro perspective. We dived into how to get into the GCC countries last week. And this week, I thought, how about we get more of a technological side to things? Just because, of course, the artificial intelligence is literally everywhere right now, right? And you mentioned you work in asset intensive industries, also in energy, and I think it sits perfectly with the first topic I want to touch on today. The first news that captured my attention was the fact that KKR, very well-known player in the market, and Energy Capital Partners launched a 4 billion AI data center campus in Texas recently. I think it was about 2 weeks ago. Now, of course, this is a very kind of important piece of news. Why? Because the first question that comes up to my mind is, well, how is this underwriting AI data center different, if it is or not, from traditional real estate play? So, general play by real estate funds in private equity. And of course, what are the risks and the pricing variables that are kind of considered in a private equity fund when they approach such deals? And then the second one is, doesn't this sound something like the toll road playbook that usually we see happening in private equity, where essentially we try and get into an asset that is going to generate kind of uh, commodity consistent revenue across time, across many years. Definitely, it is a shift, and definitely is something that it's very important to note, because we see private equity entering in a space that probably it wasn't very traditional up to a few years ago. But I really want to know what you think and how you see this change in their strategy.
I'm not going to comment on KKR strategy, Andrea. I'm not the right person to. I'll just put forward a few of the elements of considerations that are probably underlying the rationale behind that deal. The first one is the location, and latency is a key criteria. It's getting closer, just building infra closer to your end customer, geographically speaking, is becoming one of the core criterias for obvious reasons. Geopolitical risks, access to energy, and a few others. The second one is, and I've mentioned it, it's being able to access energy in a reliable way and being able to predict the cost of that energy on the midterm to long term. And the last thing I'm going to put forward is, and it's probably linked to the geopolitics I was mentioning, is the regulations are becoming stricter and stricter. Geopolitic entities are realizing that access to reliable and cheap energy is a strategic differentiator. We can see this a lot in the GCC, but obviously also in other very mature markets like the US and Europe. Access to funding is a bottleneck. Access to private funding is probably a new frontier.
Yeah, and I think, when you talk about capital, I always try and converge a little bit also towards human capital, because of course the set of skills that are needed to manage such deals now are not just necessarily hardcore accounting, private equity knowledge, but we need grid specialists, ESG lawyers. You mentioned localization, so data localization advisors, like a whole set of new people that sit at the crossroads of different industries, and very much probably different practices and different skills, right? That go far away from the traditional finance. And I think this is a trend that we've seen already in public markets, and is definitely arriving more and more and more into private markets, which I'm gonna touch more deeper later. but staying a little bit still on the deal side, and then we're going to move more into the technological part. Another interesting fact is that Meta, so the very well-known Facebook original company, raised 29 billions recently to again fund a global AI data center, right? So again, we see that now it's not just the private equity entering the space, but also the tech companies are tapping into private equity to build the infrastructure that they need. And I think, what I wonder here is, are we getting into a model where the tech companies understand that they need the infrastructure, but even though they have cash and they have the money to probably own it, they instead decide to partner up with funds so that they can, for example, lease back or kind of not focus their capital, their opex on kind of infrastructure, but more on the R&D, and instead outsource these towards the private equity space. What do you think in terms of how these companies are leveraging private equity space?
Again, putting forward some of the underlying dynamics in the industry. AI as a whole, and it's got a pretty complex value chain. But if you look at the key enablers, so the infra layers, it's violently capex intensive. On the access to energy, on the data center, on the communication side. If you now add the satellites, it's violently capex intensive. Despite the fact that some of the major players in the tech space are extremely well capitalized, you're rightfully putting forward the fact, Andrea, that companies are increasingly trying to mobilize the capital that they've raised directly within the blocks in the value chain that they control. Everything else that can be, in between brackets, outsourced while maintaining a direct control is being done. And we've seen this in other comparable value chains, over the last few decades. And it's happening at an accelerated pace in AI. I don't see, on the midterm, data centers remaining on the balance sheets of major tech companies, putting aside the hyperscalers. So it is getting more commoditized within certain parameters. That's my view, Andrea.
I agree. And this is the thing, right? Is again, it's always a risk mitigation exercise. It's a risk mitigation exercise from an interest rate perspective, from a, again, OPEX perspective, excuse me. But also, again, there is a lot of delocalization when you build data centers as well. I mean, we've seen also US companies signing deals recently to open data centers as far away as the Middle East, right? So that comes with a whole other set of geopolitical risks, exposures that clearly, big techs, they don't really need to worry about. And instead, they probably decide to delocalize the off balance sheet, as you mentioned, localize the risk into private equity firms that definitely can manage it better because that's their core business, right? So sounds like there is actually a great opportunity for private markets right now that, I mean, we do have some data that have been growing even more than public markets recently in the last years. And so clearly there is more need for these services. Now, this kind of takes me though to the third part that I want to discuss today, which is the application of the technology into the industry. Now, it is an industry that clearly is getting a lot of inflow, right, in terms of capital, but it's also an industry that has been traditionally very traditional, very much human powered, very much, let's say, manual. And we do see now the rise of a lot of solutions that, of course, try and make this manual work more probably automated, right? And that is going to help them saving costs, probably gaining competitive advantage as well against their peers. Now, what is the role of AI powered, for example, deal intelligence solutions, tools that can help, managing client relationship, CRM, and probably predict deals as well? What do you see happening there?
A few elements of context. First, you're totally right in saying that private equity and private markets as a whole are slightly lagging behind other financial institutions in terms of uh, adopting the most cutting edge technologies, more specifically in AI, more specifically around agentic models. There's all kind of reasons why it's probably, access to information is a bit more difficult, definitely more difficult. And it's a significantly more concentrated industry also. People, one could say that there are elements that are intangible that AI is not really ready to tackle. The famous art of the deal. There's a president that
Yeah.
wrote a book on this, argues that it's more art than science. I would question this. I mean, obviously there's an element, there's intangible elements, but at the end of the day, when you step back and you look critically at the industry, the value chain, it's putting aside the relationship element and trust element, which are by definition intangible. The rest is information processing at speed. So we're seeing private markets, first of all, grow in importance to fund the transformation. So if you look at numbers, and again, I was running a search on this, we moved from 4 trillion to 13 trillion dollars over 10 years. And it's sorry, give me 1 second. Gabs, tu peux foutre le camp, s'il te plaît? Foutre le camp. And and apologies for this. My daughter just come in. Problem. And liquid asset managers are increasingly deploying agentic solutions to remain competitive. So I'll give you, let's dig into the specifics. A typical analyst in private equity, the famous 80 hours analyst,
Mm.
a lot of quantitative analysis. Nowadays, with the most cutting edge technologies, a big chunk of that, and when I say big chunk, it's probably around 90 to 95%, can be automatized with a very high level of reliability. And these are game-changing paradigms that key players in the industry, first of all, are realizing, and more importantly, are starting actually to implement in more innovative business.
Oh, I think I lost you. Yeah. Yes, Jean-Paul, sorry. I think I lost a bit of connection.
No
You
worries.
think, yeah, so
Yeah, go ahead.
no, you made your point, I think, right? Yeah, yeah. So sorry, I think I was a bit lagged. No, that's absolutely yes. I can totally agree with you. There is another bit though, which I want to touch on, being data. And the reason why I'm asking you this is because, of course, the advantage of private equity has always been very much proprietary data. The fact that would give an advantage to these companies was to have access to, internal data, balance sheet, or any other type of information that probably wasn't available to the public. And now we find a situation where to run these solutions that you mentioned, they only find themselves really having two options. Either they develop and deploy solutions in premises so they can hold their data, or they have to rely on third-party solutions, which usually comes with taking their data away. Now, these links probably to kind of the fourth part and the last one that I want to touch on today, which is the role of artificial intelligence and data in the infrastructure overall, right? So, what is the infrastructural impact in the industry, but also in private equity firms, so that essentially are they gonna lose a competitive advantage because of artificial intelligence and the way they handle data? Are they gonna gain a competitive advantage given by the speed, but missing out on privacy, for example? And what other type of infrastructural changes you see happening with the introduction of AI in the industry?
The way I look at it, Andrea, is the agile players will definitely gain competitive advantages. Obviously, the traditional lances still apply on this market. You have a first mover advantage, and obviously speed and accuracy are, in their most generic terms, are key enablers to put in place successful private equity deals, in addition to the art of the deal and the relations. So if you're able to process more deals quicker and come up with more innovative models, building on all the other intangible assets that we all understand are critical for the industry, given the private nature of it. Managing actively access to proprietary data versus the need to train, the need to access publicly available data to make sure that the models remain solid, and more importantly, remains more solid than other competing models. If you're able to find the right balance, you have an edge. And we're starting to see that. You and I, in the preparation call, we're putting forward the fact that within the industry, there's a lot of newcomers that are in the process of building, the Goldman Sachs of the future. Will they succeed? Probably yes. How quickly? Let's see. We're seeing some, if I look at the technologies that I'm familiar with and the firms I'm familiar with, um, yeah, in the private equity space, there's a lot of players that are actively deploying agentic AI solutions to, I would say anywhere between redefine and radically change to revisit and optimize their value chain, and they're gaining traction.
Yeah, and this is exactly right. The change I do see as well, and this is a change that we've seen before in the more public markets and kind of sell-side banking. But there is a change in the logic, the way the infrastructure of the whole private markets industry probably is shifting. There is also, as you say, some companies decide to build rather than buy, and usually when you build, if you build very very well, you can actually get a massive competitive edge, as you mentioned. I remember the story of Goldman Sachs. At some point, Lloyd Blankfein said, "We are a tech company. We're not a finance company," right? So, I guess it's a story that kind of we've seen already, but just because now happens in the private markets, it sounds like something new. And probably because before it didn't really happen on the wave of AI, but it happened on the way of just digital transformation. It was probably less fancy or less under the spotlights. And of course, there is a whole transformation on how these companies manage their due diligence, the way they handle deals, and also I guess the ecosystem per se, right? Last week we heard from operating partners, APEC Group, and of course, their role is to provide those services, no, to funds in order to kind of get into the market, get into different market, or essentially set up their operations. And turns out, in my opinion, that probably operating partners will become also AI integration architects for these funds. So essentially, not only banking license service providers and banking services, but also technology services. Also, yeah, being those project managers that maybe a fund would need. And of course, probably the way each fund is going to kind of build their own solution, is going to integrate the existing solutions, is going to make the difference. So probably the real challenge will happen on the tech stack rather than on the hiring the best talent, I guess. So that's probably in line with what you've described. Just a quick question as we head towards the end, because we always have strictly 30 minutes. Generally speaking, what do you see happening relevant in the next 1 to 3 years? And what do you think we should really keep our eyes on, whether it's AI, whether it's private equity, or whether it's the merge of the two?
Few concluding thoughts. First of all, this is an industry, sorry, this is a space, and I'm referring to AI in general and more specifically agentic AI, that is changing at paces we've never seen before. Really, and the typical comparison we often hear of, we compare, the genesis of AI with electricity. Often they're poor comparisons. AI is transforming a multitude of value chains at paces we've never seen before. So that's point one. Point two, how is that going to evolve? I've stopped trying to predict how trends in the market because it's impossible. There are no reference points. Things we need to watch for are, from my perspective, the following. First of all, the intrinsic capabilities of those systems. More specifically, the models and the agentic systems. There's a race to come up with meaningful operating system, and I refer to the traditional definition of what an operating system is. Operating system for agentic AI. The firm that I work for is focused on this, but we're definitely not the only ones. Capital is, and that's interesting, capital is at this point of time plentiful. Will it remain like this for the foreseeable future? Question mark. I do think yes, if you were to ask my opinion, essentially because of the criticality of the value chain. But how will that unfold? Big question mark. Point number three is, in addition to the intrinsic capability, it's let's watch the impact AI is going to have on a multiplicity of markets. The job market, cybersecurity, the geopolitic, AI energy consumption, but also the software market as a whole. Lastly, IP. Where does IP lay? That's becoming really, really critical. There's a few legal cases in the US that we need to watch very closely because they will define how conflicts will be managed forward around specifically IP. And that's it. You've mentioned multiple things just to react on, and again, I'm looking at the watch. Build versus buy. This is an underlying dynamic that is super important. The other thing I'm going to put forward, the new ecosystem is your AI tech stack. The new ecosystem of your basically your private equity ecosystem is the tech stack. Approach the tech stack like you would approach an ecosystem. That's my last advice. Andrea, back to you.
Nice. Jean-Paul, thank you so much. It was very, very insightful. I know you're tight on time, so actually, I really don't want to keep you. I really appreciate you finding the time. I think it was extremely insightful. Of course, for everyone, this will be posted in our YouTube channels, on LinkedIn. Of course, the event is recorded, so you can share it across your peers. And I look forward to talk to you again, Jean-Paul. Thank you so much for finding the time today, and stay tuned. Have a lovely weekend, everyone. Bye.
Good.